Let's look at just a simple cash flow example where you start off by having $250,000 in your business that haven't allocated, and you're thinking about, I'm going to collect that 250 one way or another. So let's say you want to break this down into really kind of three different places. You take a salary of $150,000, then you take a distribution of $100,000, and then you can max your 401k at $60,500. Now, I will say, talk to a tax professional on this. You want to make sure you understand a couple of things. The first thing to understand is taking a reasonable salary. So there's a process to determine, but depending upon what job you have in your business and what has to be a reasonable salary. The difference between salary and distribution is the self-employment tax. You can't just take everything in distribution. Still have to pay taxes on the distribution, but you reduce some of your self-employment tax by having a distribution. And then the 401k, if you have an individual 401k, there's a max amount you have to do. So again, you need to understand the calculation, talk to your tax professional to help you understand how you can take money from your 401k and relate it back to your salary. So if we're in this case and you decided, I want to take money out of my business, I want to invest some of it in my personal accounts, and maybe it's going to be a combination of an individual 401k, which you can't get at until age 59 and a half, or than just normal non-retirement savings. So this is how it would break down. And again, I don't want to be too caught up in the numbers, so you can do the calculations and talk to your tax professional. But let's just say it's 2026, you live in the state of Minnesota, you have that gross income of $250,000 total. From there, your taxes are going to be about $46,800. So that's not too bad of $250,000. Now, where are you getting your deferral? First off, you're getting a big deferral because $60,500 is not being taxed. You're putting that into a 401k that won't be taxed until you take it out. And hopefully when you take it out, it'll be at a pretty reasonable rate at that time as well. And then you would have an additional $142,700 that's going to go to your personal account. Now, if say you have a spouse that's also making a bunch of money, then that's going to throw off these taxes. Something else to take in consideration, of course, is you have to live. So I don't know if your living expenses, if you have $142,000, how much that has to go to that versus putting into own personal savings. But I want to create just a simple breakdown. If you want to take $250,000 to your personal wealth, save as much as you can into your 401k, take the distribution, keep your taxes at a legitimate rate between deferring to a 401k and also taking a distribution up above what you have to take as a salary, that's how it all plays out.